Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, when the market opened Sunday night, I commented the fact that, we had gapped up in both silver and in gold, and we should be looking for highs coming in with the ABCD pattern that we have here. This measures to 86.50, 86.49, folks. We're trading at 85.92. The high has been 86.36, so it missed us by 18 cents. The gold was a little more reliable. We take a look at the gold market here. Let me get this up here for just a second, and you'll see where we are. Hold on here. Here's the gold market. And this was a real easy one because let's get this over here. As you can see here, there's where we were. We were sitting right at the 786 here, folks, on the open. And you can see here we just opened higher and then just away that it went. I'll bring that to your attention here and show you what we were watching. I did it on two different time frames, but there it is. Once we popped through that 618, away it went. It measures to 46.43. The high has been 46.40.50. So it missed it by $1.50. That's where it is right now. We've been following it along with the AI program, and as you can see, it did a pretty good job for the low and the high. We had another ABCD in this one here early this morning on a really short-term time frame coming up to that level right up in here, and now this is where we are right now. Now remember, the last part of this day here is the weakest because it's gone through too many iterations or spots to make it. In other words, you've done most of your work on the calculations in through here. These last few hours are the most difficult. They still work sometimes, but sometimes they don't. Well, that's like everything else. All right, so we've covered that out there. We've got a few other things now. The main thing is if that S&P goes above 20, I think it's pretty close to doing it right now too. If it gets above 2020 in the S&P, then that will tell me that this is Bradley's either one day off or it's not going to work. And I'll be really surprised if it doesn't work. One day off doesn't bother me, but there's so many things that I covered that are wrong with this market going a lot higher. But boy, it's going higher, so you can't stand in front of it. Look at this Dow Jones, folks. At one time, we were down 500. Now we're up on the day after having that big runoff. We had a big move down, and boom, away it went. Let's just double check to see if that was anything. Oh, we got to go to an hourly chart to get that up. That might have been a 382. I wouldn't be surprised. Let's get this up here. We'll draw this over here like there's where we are. Get this out of the way. Come on, Larry, get this out of the way. All right, what we want to do is we want to see from we can't because that hasn't taken a new high out. All that was right here was went right exactly to the 786, and now you can see we're almost ready to take this out, and that would mean that it's not following what the Bradley said it was supposed to do. So you've got to keep that. It's not how much money you make, it's how much money you don't lose, and that's the whole key. I said in the video last night when it dropped, it's down $3,000 at one time on the NASDAQ and also on the S&P. And I said, look, you put your stop at break even just in case something crazy happens, and crazy happens. So by golly, you got to stand out. And that's what we're watching here. Okay, now let's take a look here at the crude oil market. Now, I really was very, very bullish crude oil last night, folks. Let's get this up here, and I want to show you why. I'm going to get the 30-minute up because it's 13-minute. Yeah, there's what I wanted to see. I was really bullish the crude today because what I wanted it to do, and it didn't quite do it, was to come in, make a beautiful 382 here at this level right here, and it couldn't do it. It tried and tried and tried and didn't do it, but it's starting to move higher. Folks, this market is not acting acting as bearish as the news is telling us. The other day, look at this. The same thing happened. We went right to the 382. This time it can't even make it. This is when we get above here, it's going to start having some legs on it. I know everybody says it's going to 49 or something like that, but right now it's not giving us that indication. If we start getting below 58, and I'll say, then we might have that chance. But right now, that doesn't look like that's what it wants to do. Okay. All right. Now let's take another one. Let's take a look at the old number sequence here on the euro. Same thing. Big news in the euro with all this other stuff going on. Put this right in the video. We had the ABCD right to the bottom. Look at the symmetry in these two moves, folks. Just look at them. They're absolutely perfect. They're both 382s. Well, this was a 618, was also a 382 of a much higher number back here. And what is it doing? It's starting to back off. The same situation they're telling us in the news about the U.S. dollar is the same situation they're telling us about AI and stuff, because the AI charts do not look bullish. Even Google is the only one that's been the leader, and that's even, I think that was even down just a tiny bit today. But the main thing is that Dow Jones really turned around, just like the S&P and just like the NASDAQ and just like the Dow. And if it goes straight up from here, it's going to go without me, but boy, I'll be really surprised. Okay, and you know what, folks? I am surprised a lot. All right, let's move over here and take a look at the British pound. That was another one that we had on our watch list, and also the Japanese yen. We want to look at both of those because we follow the currencies daily because they're so much fun to trade. There's virtually any interference with anything else that we're looking at. There's our British pound. We had let's get the hourly up so we can see where we are. It's still banging up against those same highs. Let's see, how much did we come up last night after the big back? Remember, this is where we were here a couple days ago. That was a big spot. All we did was we come down, and we're going to see we rallied back. Looks like just about exactly 61% this morning. Yep, pretty much it. So it's doing pretty much what we expected. On looking at the long-term daily, we still believe we're heading down. We just have this little rally here, went right up to there, still believes we're heading down in that. So I don't believe the U.S. dollar is looking bearish. It was due for a correction. We mentioned that in the newsletter. We mentioned it Friday because it just completed a big ABCD. Let's get this up here, and you'll see it here in just a second. There it is, right here. Just made the big ABCD right up there. Let's just take a quick look, and we're going to see everything together. Okay, get it over here. There was the ABCD we were looking at. There's where it is. Look what it pulled back today, folks. If you think this is, if you think this is bearish, then I can understand that. But look, the last move up, we had a pullback just like this one, didn't we? Okay, so let's go look. You come right over here. You go from high to low. Look how close that is. You see that? That's how those parallel channels are built, folks. See, they're built like that. Then they just clone them and they bring it down like this. And you can see you're still in a really strong uptrend. Okay? Now, what if this is a 382 off of something way back here? And it might be. Let's just double check it. There's your low right here. That went a little bit below it, but pretty close. Anyway, let's take a break here, and we'll be back in a few minutes. Norm Winski at the break, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, I will switch over to soybean meal. We had some very good news today in the soybean meal, and as you can see, it hit the 382 and said goodbye. And news must not have been that good, because you can see we hit it here once before, and you hit it again, and then boom, down it came. This was right on the open, as you can see, because we've been trading there several hours, and now we're completing the larger ABCD pattern down in here. But frankly, the way the meal is running right now, the fact I think it's below the 786. I mean, some of these commodity prices, folks, are getting pretty cheap. So whether they're going to continue or down or not, we'll have to wait and see. Okay. All right. Let's take a quick look at the wheat market. Someone asked me to take a wheat market, and they asked me to do it with the AI. So I'm going to bring that up, and we'll have some fun. Take a look. Oh my goodness, something happened here. Oh, that must have been related to what happened with the beans. Yeah, it certainly did. Let's get the forecast out. And there was our forecast for today, and you can see it did the exact opposite. This was fact is, you'll be able to see it here as soon as I change it here. Just a second. I'm doing now, folks. I'm doing the mirror image of this, and then you'll see there's a mirror image of it, and we'll see how. Oh, shut the front door. Raise the red guy. Oh, don't ever give an Italian a mouse, folks. It's not good. I'll try to get it back here without too much trouble. Now, I've got to redo the whole thing, so I'm not going to do that. Anyway, that's what's happened, and it's had a big sell. It had to be related to somebody either canceling an order or something like that. That would be my guess, because it was very bullish from what they first said on Bloomberg, and then after that, it gave up the ghost. Let's take a look at the Japanese yen. We want to be watching that, because I think that's going to be one of the sleeper trades for the year on a longer term basis. Let's get this up here. We'll get it up here on the hourly, up around this 155, 152 level. And we're a little higher. That's what we want to see. We're right here. Well, let's just bring this over here, because you can see what we're doing is we're getting ready to make this giant ABCD market right here. Okay, that's going to be over the last 5 or 6. Well, let me see, 1, 2, 3, 4. It's about 5 weeks, and so that's where we are. Let's go to the 4-hour, and you'll see where we are. There's where I want one more high. I'd like to get it up to that 160 level, really close. And the reason why is that's where the boys came in and, borrowed all the money with the yen. But oh man, it seems like I have a propensity to, let me try something. Just a second, folks. Bear with me again. I'll get this out of the way. I hit a wrong button, and that'll do it. So this is where we would be here on this. We would look at the ABCD getting ready to come up and clean all this out. We've already cleaned it out, but it's got to go a little bit higher to complete this ABCD pattern, which is right there at 158.67. That'd be new highs, but that's where you want to be looking at it for a potential buy. That's, in other words, you'd be going short the dollar, long the yen. Okay, so that's what we'll be watching at that point. You can see the 382s hit there pretty nicely, and then on the way up, it's been pretty easy on the way up because look, you had higher bottoms in here, all the way higher bottoms, just fitting up really nicely, and there's where you've gone to that. Well, we don't see many 382s on this, and the reason why is we don't have a really strong trending market here. The strong trending market was right there. That was early. This is an hourly chart. That was right off of the bottom when we had the report the other day. There it is right there. Okay, where does it measure to? Right there. So we're in a zone here where it's probably going to have a little bit of a sell-off, but it's not quite ready as of yet. So we'll take this out, and we'll take this out. And we had a couple of questions about a couple of stuff. Oh boy, we're really close here in the taking out the highs here in the S&P. That would signify that either the Bradley is off by one day, which that's not right, or it's just not working. Okay, so you can see here, this was the, see, even this is not working here. So that tells us we are going to be going higher, and there's not much else we can do about that. That's why I told you to put the stop at break even, folks. Unfortunately, that's the way it goes. We'll look at it again another time, but I'm not going to stand in front of these freight trains. Not me. It seems to me that January in my life of trading is always pretty much the same, but this one's a big one because I had the same thing happening in 1980 when gold was topping, and I got out of it on the 8th of January. It broke $150 down to $550. I got out at 700, and a few days later it was trading above 800. 800 on January the 8th. That was just a couple days ago, was where I got out of it. But on January the 20th of 1960, it hit a high of 865 and went down for 21 years. I think it's going to be the same thing this year, but boy, it's not an easy gig, and you got to be really careful with it. That's, you can see here as this thing keeps going higher and higher. We're almost at 2,600. The old high on this, remember, on the old high on the NASDAQ, folks, was right there, 26,400. So that's quite a ways from it, but the others are on new high ground. Well, there's here you can see here's your thing on the thing right here. The old high was 70-20 on Friday, and here's where we are right now. I mean, it's just not working. So just stand aside. Nothing else you can do about it. Okay. All right, let's get over here, and we'll take a quick look at the Russell too, because people have asked about the Russell. It's also did a lot of swings here today. See, we went below the 382 retracement here of the low we made right back here. I don't think there was one lower than that. That would have been it right there. Yeah, you'd have to take that one. And it went below it a little bit, and then you can see just keeps wandering higher and higher. So there's no selling coming into this. Of the things that I sent out last night, there was one that looked really good, but it totally busted. I want to show you that. This is emerging markets. I don't know much about them, but I know they're emerging, and this one's certainly emerging today. Here it is right here. Get the daily up here so you'll be able to see it. There's big ABCD. Look what happened. See, it took this island reversal and said, goodbye, island reversal. And there it is right now, making another new high up in here. So this is telling me that something's not right. They're buying emerging markets, and that's it. But remember, I'm looking at the U.S. market, and it just doesn't want to go down. So I gave it one day. I'll look at it day to day. And, hey, look, if it breaks, hey, I'm going to be there. You know why? Because 382 is going to be the one to do. Whenever you get the markets that break to the downside, all you got to do is do your 382s, and you're going to be in business. That's all you have to do. No better signal than that. Okay, let's move around here. And someone asked me a question about Tesla, and I don't know what it's doing yet today, but we'll take a quick look at it. And TSLA. It's up today. There you go. Look, Tesla's having a nice little move. Looks like we're coming right back to a 382 retracement here. Let's just check it out just for kicks and giggles. There's your high right up here, and there's your 382 came in right there. That's trading really close to it right now. This was the 61% retracement on the downside, as we talked about just the other day. So that's lined up pretty nicely. Okay, now in just a few moments, let's see how much we got. 33 seconds. We've got to do Apple, and then we'll have the apple of our eye. Mr. Norm Winsky will be coming in, and he'll be telling us what he's looking at. So stay tuned, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and I believe we have Norm Winsky of Astro-trends in the house. Norm, welcome.
Thank you, Larry. Can you hear me okay?
Coming in great. Go ahead and start, my friend.
Okay, I was last on your show on December 29th, and I gave forecasts for four cycle windows, four timing windows, and we're going to review those now. So the first one was over the weekend of December 26th. We had a Mercury cycle. Anytime we have Mercury, we want to be looking at the grains, corn, soybeans, wheat. And AC means after the close, so that puts you into the opening of the next trading day, which would have been the 29th. Okay, then the night of the 29th, we had Helio, that's short for heliocentric from the point of view of the sun. We had Jupiter lined up with Uranus. Jupiter is in Cancer, and Uranus was in, I believe, in Taurus, the bull. So we look at cattle, copper, cotton, and silver. And then the weekend of January 2nd, we had a full moon in the sign of Cancer. Anytime we have a full moon or new moon, we round up the usual suspects, which are financials, that's stock indexes, T-bonds, and currencies. And then we have grains and precious metals, oil, and because it's in silver, well, we'd be doing with the moon, you're doing silver anyway, under precious metals. But we have a double emphasis there on silver because the full moon was in Cancer. And then also that weekend, we had Saturn line up with the U.S. natal chart. What is that? The natal chart is a snapshot of where the planets were when the good old USA was founded on July the 4th, 1776. And then we look at where the planets are now in relation to those planets and see if we have some harmonic lineup. And we did with Saturn to where Saturn was on July the 4th, 1776. And that's for any time we have to the U.S. chart, we want to be looking at U.S. stocks, T-bonds, and the U.S. dollar. So let's go right to the charts now. There's corn. We had 2 points for the corn. We had the Mercury cycle and the full moon. And there's your Mercury cycle there on the opening of the 29th. And not too bad, just past that high there, a few pennies, and then down we went into the perfect low there, right past the weekend with the full moon, and then right back up. So that was every penny. If you don't know, in corn is $50, and you look at about 50 down to it's about 14 cents down, and about 10 cents going back up. I think. Let's see what's 37 back to about 12 cents going up. So there's probably a couple of thousand, maybe, let's see, there's a five, so about $1,500 or maybe up and down, Here's beans. Beans are a bigger vehicle, about 2.5 times corn. So about the same, we got pretty much the same turns there on the beans as the corn, just more money, Here's the wheat. We had the same 2 points for the wheat. The first one didn't work, but the second one did, and so we went 50-50 on the wheat. A nice pullback low here in the cattle because that was the Jupiter-Uranus lineup with Uranus in the sign of Taurus the bull. Might have something to do with cattle, and it certainly seemed to work because you had a pullback low there on our window, the 29 AC. It's after the close the night of the 29th. You bought on the opening there on the 30th. You had a very nice rally there. I think about 8 cents. As you know, Larry, every penny in cattle is worth $400, and I think that was 8, so it's about roughly $3,200 potential profit there. And then the cotton, green arrows are good, by the way. Red arrows are bad, if you didn't figure that out. And then if we're going sideways, I don't do sideways. Because we like Newton. For every action, there's an opposite equal reaction, and the opposite of sideways is just more sideways. Here's almost a perfect proof of that. You had 3 bars going sideways, and then we had 3 more bars going sideways after our cycle window there, our timing window. So we don't do that. So that's a yellow box there to indicate it's a pass. Here's copper. This is probably the best potential in terms of money, the best trade of this session that I'm doing. Copper had a big pullback here into our Uranus window, Uranus the copper, and then it moved up. I think it was about 50 cents which is huge in copper. Every penny in copper is $250. So you're looking at about over maybe in the neighborhood of about $12,500 move there over about a week's time into a new all-time high there on that high that I'm pointing at now. Here's silver with a big disappointment, though, because we were featuring silver due to the full moon in Cancer. The first point that we had for the silver, that worked out okay. That worked out nicely. But over here, with the full moon, we got the double points there, and we got the double whack because it didn't work. It just kept going higher. Here's the gold. Gold didn't work either on the moon. That's these 75% of the time these metals turn on the moon, but not this time. Don't know why. Here's crude oil. We had a pullback into the crude oil there. Not terrific, but a little pullback there, and a pop up for about 75 cents or so, about $750. And I usually have one clunker market of each of these couple sessions I do, and that is not very unusual. But the S&P stepped forward to be the clunker market of the month there, with nothing was working. That went sideways. Then we went down, and then we went up here. We had the 2 points there over the weekend of the 2nd into the 5th, and the market just kept going higher, so that didn't work. Now, to prove that these 2 points had some effect on the markets, let's look at bonds and the dollar, because one of the points was to the U.S. short, which is the U.S. Stocks, bonds, and U.S. dollar. Here we go. Now the bonds pulled down into there. There's our 2 points there over the weekend of the 2nd into the opening of the 5th. And you had a pretty nice deal there. If you hung in there, you could have popped for about $1. Or if you got out early here, do a day trade thing here, you had the potential for, I think, about $0.75 of a buck there, or about $600-700 on the bonds. And then the U.S. dollar, we also had 2 points there. I did the opposite of the bonds, making a top there and then pulling back for about, I think it was 98.60, down about 60 cents there on the U.S. dollar index. So if we add up the green arrows and the red arrows,
stay with us.
Oh, we're going to commercial.
Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
It's a big drop record. Okay, we're back with Norm Winsky of Astro-trends. Please continue, Norm.
Okay, Larry. Thank you, Larry. So I was about to say when we went to commercial, adding up the green arrows and the red arrows, we have 13 winners, 7 misses out of 20 for 65%. That's on the kind of on the low end of my usual results. Coming up now in the media this week, the night of the 14th, we have Mercury apogee. That's Mercury will be its farthest from the Earth. Anytime we have Mercury, we want to look at the grains, corn, soybeans, wheat. And because Mercury is right now in the sign of Capricorn, that also indicates something might be happening in coffee. Then the night of the weekend of the 16th, we have Uranus making a 120-degree angle to the U.S. Pluto. That's where Pluto was way back on July the 4th, 1776. For stocks, T-bonds, U.S. dollar. And then that same weekend, which will be a 3-day weekend because Monday the 19th is a market holiday, we will have a new moon in the sign of Capricorn, and we want to look at financials, grains, precious metals, oil, and with an emphasis on coffee. Coffee usually doesn't dance to the moon, but we're thinking that because it's in Capricorn, coffee may be doing something there. Now, here's my little educational segment here. I'm going to talk about, because it's January, and many people tend to think about, gee, I wonder what the rest of the year is going to be like. This is when I start talking about some of my longer-term forecast models, such as there's something called the decennial pattern, which is something that I've been talking with Larry about. With the, I think it was first published in the 1930s, and it showed where when they stacked the data for the, for the Dow Jones by decade on top of each other, they saw there was a pattern, and the old pattern before 2000 was just, for example, you tended to make a low in about the second year of the decade, and then you would rally up into a strongest year would be the 5-year, and then sort of a distribution topping on the 6-year, and then 7-year was usually the big bear year, and then the end of the decade was also usually bearish. That was the old pattern. I noticed that when we moved into the new millennial, 2000, that everything's tended to shift 1 year. So whatever I just told you now is 1 year later. So this is the 6th year of the decade, 2026. So that would suggest, if that's right, that there should be a good up year. And then we need to start worrying about topping the bull market out maybe next year in the 7-year, and then in the 8-year, the 2028, will probably be a down year. There's your long-term. Now, for the year, there's something called the January barometer. As the old saying goes, as January goes, so goes the year. So if you have an up January, that means an up year. Down January means a down year. That worked high percentage of the time for about 100 years for the Dow Jones and so forth. And so I do that based on, I do a forecast based on that. I usually do the S&P 500. Also do the commodities based on that too. So I have about 28 different forecast models based on that idea. And then there's a tie-in, believe it or not, between by the way, January barometer is called a fractal model. It has to do with looking at the smaller picture and extrapolating to the bigger picture. Now, there's a tie-in between the January barometer and the Super Bowl indicator, and for many years, you could actually use what happened to the stock market in January. You could predict who's going to win the Super Bowl. Pretty amazing, huh? Now, here's a sample of the S&P 500 for 2025. The blue bars were the forecasts that I published in February last year, and then I overlay the actual prices on top. So it's not 100%, obviously, but it's not too bad. I'd say it's about maybe a 75, 80% correlation. They're not too bad, Okay, so there I am there. Been doing this for 50 years. And so forth, and there we go, and here's my contact information. I'm in beautiful Naples, Florida. You can call me at 239-594-3939. That's 239-594-3939, or you can email me at nwinski@yahoo.com. Looking forward to helping some of the folks there, Larry.
Also, we have an accolade for you. What's his name? Andrew Ross Sorkin came out with the book 1929 a couple months ago, and in that he mentioned Evangeline Adams, believe it or not. So he must have been talking about J.P. Morgan and astrology. Andrew Ross Sorkin, the guy on CNBC with Joe Kernan. He comes on, the tall, skinny kid. He's the one that wrote the book Too Big to Fail that was very popular. This one's also a bestseller. So he's saying a lot of things that remind him of what's going on now, the 1929. I think they had him committed this morning, but I'm not sure.
He should have contacted because, Larry, I own Evangeline Adams' library.
I know you do. That's why I was bringing to your attention. I was hoping they had an accolade in there for you, but there wasn't. So anyway, we ought to get the book. It's very interesting to see all the things that's happening because, last time we had tariff problems was back in the 1930s with the Taft-Hartley Act, but not this year. This year it's all green. All you have to do is buy, and it goes up every day. Hey, Norm, listen, we're going to have you on again soon, and when you're ready to tell us something, let me know, and we'll put you on the docket, okay?
Thank you very much. Got any questions or comments from the Tiger's Den?
Yeah, there is one question from someone, and they ask if they had one book to get starting into astrology, which book would you suggest?
I have a course where I teach that. I use Margaret Holmes' Modern Textbook.
I fell into that one. I'll have him contact you, Norm.
Right, exactly.
That's good. I'll have him contact you, okay?
Okay, thanks a lot.
Okay, all right, thank you. All right, folks, we'll be back in just a second here. I've got to get the program hooked up again to show some charts, so bear with me in just a second. We've got the markets are still, we still haven't taken out the highs in the S&P, but it's just a matter of seconds here or close to that. Oh, dear, I got to do this. Just a second. All right, get the full screen up. There's where we are. Get that. By the way, folks, I found out through one of our friends down in Memphis, Tennessee, that the problem with the grain markets today is there was a report that came out on the grains, and it was quite negative, and that's why you saw all the stuff falling out of bed, including the corn. I'll bring that up here because, we shorted corn a few weeks ago, and we're long since been out of it, but it really took a bit. Corn's down 20 cents today, folks. That hasn't happened in a long time. Actually, it's down 25 cents. That's a big bearish report. Also, we saw it in soybeans and then also in wheat. That's the whole problem of this market. But I don't know why the people are taking their money out of corn and wheat and soybeans and they're putting it in the stock market. Why didn't I think of that? Fate fubo. Get wise. Anyway, that's probably what's happened, but who knows? Another market we'll take a break here. We'll cover sugar when you come back, okay?
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're only 2 cents away from the S&P making a new high, which would mean the either Bradley model is off by 1 day or it doesn't work. I'd have to go, it's probably not going to work, but boy, with all those things, I'll be really surprised. But I get surprised a lot, that's for sure. Just, I've never seen it lined up this way, but by golly, it's just not turning down. I thought for sure last night it sure looked like it with the S&P down 50 handles and the NASDAQ down 300 points, and they've all come back and more buying and more buying. It keeps going higher and higher, so you can't stand in front of it. A very interesting thing happened on Bloomberg today. They had a sequence here about Jeopardy. They had the finals on Jeopardy, the three big guys on Jeopardy, and the one question that they all failed was, What is the standing for in the United States for stocks? What does ETF stand for? Not one of the three got it right. And these were started in 2005. I thought that was kind of surprising. They only do $20 trillion of ETF business. I mean, why not? But they didn't get it. So that was, they must not be very woke. That would be my guess. Okay, now later this week, we're going to have Mike Moore on. We're also going to have Stan Harley on. And hopefully we'll have Jeff Hughes on towards the end of the week and have a good repertoire of things that are going on, because market could be going higher and higher, and it is. So it'll keep going until it doesn't. That's basically what we're looking at here today, folks. So live every day in an attitude of gratitude, and may God bless. And try to do something nice for your neighbors, folks. People are having a rough time everywhere, especially in Central California, believe it or not. All right, that's it. And have a wonderful day, and we'll catch you on the flip side tomorrow.